Good morning, everybody. Today is Wednesday. It's a very important day. It's March 6, 7:19 a.m. Eastern Time. It's very important because we have Jay Power testify at the Congress. Okay. Consequently, his speech tend to move market, especially safe haven assets, especially DXY and TNX. Okay, so but anyway, let's start to talk about to review the market structure left in the book yesterday and what we have in the book at the pre-market. Okay, uh, just give me 1 second, and then we will start. Let's go. So yesterday, the volatility skew, the only divergence that you had in the structure was the volatility skew, right? The volatility skew at the close show us left, sorry, not show us, left us a bullish smirk, right? It's a bullish smirk. But my doubt is a trap or we will really see a bounce. During this week, right, especially during the trading hours, I have been also telling you guys that we supposed to be see a bounce Wednesday and a sell-off Thursday and Friday, right? Because during the intraday, we saw the skew curve, the volatility skew curve, print a bullish smirk on Wednesday and bearish smirk Thursday and Friday. Just to review the closed group that I highlighted this like several times. But my main concern today, I mean yesterday, is this is we will be a trap or not. Why? If you check the market structure document, I highlighted that it's totally normal to see a melt up at the close. A melt up at the close. Bring higher implied volatility to calls and remove the implied volatility to put contracts, bring premium to call. If they already know what Powell will tell to the Congress, and if will not, how can I say, go in favor of what market's looking for, so dealers want to sell high, right? So dealers want to sell high. So that's totally normal to see a melt up. Dealer don't sell cheap. Dealer try to melt up to sell high. I also have been highlighted to you guys that we are in a distribution. Why we are in a distribution? Because the DIX haven't been passing by 46%. The entire year so far since January, the DIX have been fluctuated between 46.5 and 44%. So dealers are really not willing to buy. I mean, market participants are not willing to buy. Consequently, dealers remove the liquidity from the book, right? We have been monitored all the gamma squeezes those last 2 months that have been really profitable to us. You guys already realized that I'm not more comfortable to hold long positions. first of all, market, it's already overextended. That's the first point. And the second point is the DIX is not printing bullish, it's not giving us, how can I say, guarantee that dealers are willing to provide the liquidity and market participants are willing to buy. So because these two motives, I prefer to hold cash and just to do swing trades. Okay, so let's go back for the market trap. So this could be a trap. I put in this document that this could be a trap. But Monday, Tuesday, we saw the volatility skew for today print as a bullish smirk, but Thursday and Friday bearish. So we could see a bounce today as well. But I have a doubt because the flow. Okay? Because the flow. So, overall delta flow, bearish. So the old minus GX is 50-50. You guys know that I opened a position yesterday as soon we backtest 58, right? That I speculated a pullback up to 50-55, right? What I did, I sold a call spread and I bought a put spread. I received $50. Of course, I paid $23 commission, so I received $27 to build a bearish structure that at the end pay me $3,000, right? We backtest 5,056, and then dealers decide to bring the market up and close below 50-80, right? Why I was looking for 50-55? Because the deltas didn't give us any any buyable region above the minus GX. Was flow, 100% flow. A lot of people just say, the downside target 65, 75. Even myself, in the market wrap that I delivered to you guys last Friday, I cited 50-75 as a worst case scenario for this week. Remember? But we need to review because dealers, machine, robots look for premium. So they reset up things, especially because nowadays they have the facility for the zero DTE. And a lot of retail plays zero DTE. Easy to collect money, easy to collect premium, right? So, why I didn't told you guys to buy at 65? As I said, delta flow didn't show us any buyable region, and the minus GX was located at 50-50. So usually, they buy before reach the minus GX, because what is the pattern of a negative gamma territory? Sell weakness by release. So they will not allow markets to backtest 50-50. And then my structuring pay me off, not 100%, because my 100% if it was closed at 50-55, and my 100% is supposed to be 5K. My profitable was 3,000 something, but it was a good profitable, especially because it was a very safe having structure that I receive to follow the flow. So consequently, we break down 75, 65, and we backtest 55 yesterday, right? So the delta flow also for left yesterday is also printed 50-50, okay? And I also highlighted key delta level 50-50. There's a lot of people is allocated here, have holding puts here. Okay, and I also show you guys that probably the maximum upside target is supposed to be 5,100, because the five, if you break up 5,100, squeeze supposed to be starts, right? Squeeze supposed to be starts because people are loads of calls at 5,105. Okay, so this is what they left in the book yesterday. Regarding gamma design, they lowered the minus GX from 50-50 to 535, but they built a defense at 50-40. Okay, at 50-40. Also, somebody in the book, my interpretation was that they bought. Of course, I could be wrong, right? But if they bought, they break even supposed to be 5081.94. So 5081.94 is above 5078. So suggestion is a gap up, right? Suggestion is a gap up at the open, right? And a bunch of spreads, you know, that somebody sold 5,100 and bought 50-50. And such player received $3.74. Makes sense to sell 5,100 because per delta flow looks like that will be the maximum upside target. This guy is not looking for 50-50. He's looking to receive his premium. If you go below 50-50, you'll be a bonus. Just to let you guys know. Anyway, and regarding the dark pool, again, the DIX dropped 1% from 46 to 45%. They remove liquidity and they start to accelerate the market because the GIX dropped $1 billion, right? Let me get plus here. No, drop $2 billion, print $3 billion. So move markets now is much more easy. We don't need 5 billions to move 1%. We just need $3 billion, $2 billion less. Okay? So regarding my vision, my interpretation is gap up at the open. Of course, I didn't project 5,100 because the orders I'm looking for 50. I put 50,087 or 50,081, not 5,100, but the deltas show us 5,100. Okay, so since you guys already pay attention to the level and we review the market structure, let's review what we have in the book right now. First of all, let's bring the volatility skew. Volatility skew didn't change, the same, still printing bullish SMIRC. So this is the only divergence that we have, but it's still the same as yesterday. Now let me close over here and bring my spreadsheet. Let's bring the flow to see if you have some difference. So what we have in the flow? Delta flow, overall delta flow is still negative, but gamma became positive. Gamma became positive, overall gamma. But intraday gamma, look that we have positive gamma only above 5,100. Basically, the gamma design change, okay? The gamma design change, but the levels is still the same. Squeeze starts, you know, now instead of be above per gamma, instead of to be above 5,100, you know, squeeze is supposed to be starts. Sorry, my fault. Positive gamma now start at 59. Remember that I told you guys I was looking for 5,087. So if they bring market up to 59, we are in a positive gamma territory. What it means positive gamma territory. Means cell strength by weakness. Where is the strength right now regarding gamma? 5,100. Right? 5,100. Squeeze really starts above 5,100. Look at the difference what they left in the book yesterday regarding gamma. Let me reopen the, sorry to close. Let me reopen the, how can I say, the market structure document. Look how was the gamma yesterday, just to guys compare. If you reopen, if they left something like that, that's much more easy to do a squeeze, right? Because wherever we open, wherever level we open, right, we supposed to be in a negative gamma territory. Consequently, squeeze is much more easy. So at the close, no, not at the close, now at the open, they switch this design to this design. So since you know future is giving us like 20 points gap up, I was looking for almost only 10, right? Because my rejection rate is supposed to be 5,087. Just review over here. I cited, you know, a possibility to open with gap up, but I was looking for 50,087. Makes sense. We have like 20 points. Because, you know, they will bring the market to a positive gamma territory. And the pattern is different than negative gamma territory. Cell strength by weakness. Negative gamma, if they left, you know, if they left this at the open, the squeeze is more reasonable. It's more easy to do as well. Why? By release cell weakness, right? So they change the gamma design. But according to the deltas, as I told you guys, looks like 5,100 will be the rejection. Since we supposed to be open in a positive gamma territory, so 5,100 tends to be rejected again, right? Breaking down 5,009, we went back to a negative gamma territory, okay? So instead of you see a defense at 5,040, this defense is already gone. But in another hand, the GX that was at 5,035, now they move back to 5,050. So we need to looking for again for 5,050. This is the weakness region. So we could see market backtest 5,100, and then we could see a drop again, and the volatility skew was a big trap. Okay, I don't disregard that. I also will highlight it again what I have been saying. If we not see a break at 5,150, I don't believe that we will do all-time highs again. I mean, not again, but before a pullback. Okay? Let me now show the graph and we can talk about what just I said. Let me put the graph over here in the screen. So if we don't do something like this that have been repeating a lot here, here, okay, especially those 2 times, 2, 3, right? If we don't repeat that, and looks like that we don't, because over here, in those 2 times on one, at least 2 times, same candle, same candle, same candle, right? Almost same candle, same candle, same candle. But the difference is over here we open lower, and now suggestions that we open higher, right? Consequently, I'm looking for the volatility skill supposed to be a trap. Anyway, repeating, if you will not do this or this, that we see like a squeeze and bring us above such candle, bring us above such candle, bring us above such candle, the top could be in. I'm not telling the annual top. I'm telling about the top prior a pullback. And as I told you guys in the morning call video yesterday, my pullback target is something between 4,778 and 4,818. For me, it will be buyable over here. And then we suppose to be back test one of those levels, 5,215, 5,685, or even 5,716. That's my maximum target because it's the pivot target for the annual graph. I already told you guys all those 3 levels. Of course, that for this melt up, I was looking for a possibility to backtest 4,215. But we have a gamma resistance at 5,150. A lot of people was allocated holding 5,150 calls. Remember, markets collect premium. Market never rewards retail. So yes, Monday at 49, could you be a top prior pullback? Yes. Anyway, if we repeat this pattern and we backtest again 5,150, no, we have another leg up. That's my last target. Top prior pullback will be 5,250. This is like a graphic, analysis, not a flow analysis. Okay, just to highlight you guys. Now let's check Bitcoin. Okay, so why I short over here before and we saw dump. Bitcoin really respect intraday Fibonacci. I don't have the power to monitor the flow. I really don't fucking care about blockchain transit. I really don't care about the liquidity inside the exchange. I don't fucking care about that. I care about the graph because Bitcoin usually has a pattern. You guys have been observed that all the Bitcoiners, they have been changing their target. They came with $1 million, they dropped for $100,000, and they have been dropped. Like in the last post from a guy that they consider like the best guy in Bitcoin, his name is, I guess, Plan B in the Twitter. You guys look for 70K. I show you guys in WhatsApp the 70K because was one target of the intraday 60 minutes Fibonacci. But if you guys check the WhatsApp group, my projection, the 61.8 was exactly around 69K. It's a little bit above. It's a little bit above at the all-time high. But since it is a projection, I don't know if you go to 69 or I don't know if you go a little bit lower. But because that I short at 68,900 something when I was opening a Bito structure, right? And when I was bought BIT, and when I was bought BIT share as well. So I bought at 784 and I sold you know, at $8.20. So you guys, I like profits, and consequently I didn't hold up to 861. So profits, you know. I never know when where will be the top and when will be the bottom. So I'm looking for profits. I'm not here to find bottom or tops. You know, I'm looking for flow and to follow it. Anyway, the WhatsApp is really slow. So, but just review what I posted the WhatsApp regarding, you know, the preview target that I told you guys maybe 71, but oh, it's okay, it's already open. Let me put the Samir, because Samir knows Bitcoin much more than I, and I sent you him as well. It's really slow when I open the WhatsApp my computer. They drain all my memory. Anyway, if it takes so longer, so let's skip this one, because you guys have, you know, the picture about, you know, the projection in the group. Oh, it's over here. Be patient, folks. Be patient. Anyway, guys, forget it. So I short when my Fibo back test the 61.8%. So look now, I project this, right? And this now the new 61.8 is around 67,798. I also, in the closed group, I told you guys all the levels. So, the Fibonacci over there. Anyway, if the next resistance is supposed to be 67,799, but the Fibonacci my 61.8 is 67,798. So if we don't break this over here, we're supposed to be break down this bottom. As you guys know, my target is 48K. Okay, during the night, midnight, I told you guys, you know, several times, now is setups to break 65, and I told you guys, if you guys are short, look for 64 to 83 in 3 minutes, because the 4 hours graph is giving us a buy that we could push us up higher, right? I put you guys, you know, even in like midnight, all the targets in the what Bitcoin have been doing. And back to the preview projection that I pushed from this bottom, when we backtest EMA 50, no, my 61% was around 69K. It's a little bit lower than the preview all-time highs. That's where I short. You guys know that I short exactly at 68,900, right? Because, you know, the 100% was 71,368. And according to Fibonacci, especially Elliott waves and Fibonacci patterns, what usually, you know, the assets do? He backtests 61.8, reject, and go back to 38.2 or 50%. But since, you know, we break down 38, 26, and 14.6, so this Fibonacci wasn't valid anymore, right? And then I look for another one, right? So the rejection point right now is 67,798. If you break here, and as I explained before, if we also reject, go back to 38.2, that is located 64,528, and hold, we tend now to backtest 73. Or at least 70, go back to 67, and then 73. Anyway, if we reject again 67, and then we break down 64,528, we will break down this bottom. And possible, we will backtest 52,944. And then we project another uptrend, Fibonacci, and you look for 61.8 again. Okay, to see if the zigzag, the Elliott wave, the Fibonacci pattern will follow, a BTC will follow. If not, the last, downtrend target is supposed to be something between 45, 48K. That's where I'm interested to buy. Okay, guys, gotcha. And completing, my analysis, my market swap, and correlate with the DXY and TNX. The DXY now is breaking down the inflection point that was located at 103,661. Okay, if you break down over here, the tendency per graph is backtest the necklace at 99578. If you see this, risky assets will rally. But what I'm telling you guys, every time that we have a macro agenda that making influence in risky assets and safe haven, usually dealers sell high, buy low. As I said, if they already know what Powell will tell to the Congress, they could be setting up a trap. That's what I'm looking for. That also was my interpretation regarding the flow, the delta, the flow, the gamma design, and the volatility skews milk, right? So that's totally normal. Bring the market up. Also, the delta flow, the flow suggests us a gap up. Change the gamma design so market's not more in a squeeze setup mode, because suggestions future that we will open in a positive gamma, so it's different pattern. Also include lack of liquidity because the DX drop and they accelerate the market. I'm expect a big candle. And the pattern so far is totally different than those ones, right? Because future suggestions gap up. So dealers sell high and buy low. So maybe they are bringing to backtest the inflection point and breaking down, just like a fake breakdown, to buy cheaper. That's a possibility. And then fall with my interpretation for the structure left yesterday and what we have today in the morning. Guys, take care. Enjoy your day.